Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about FRX once more, and what I'm going to be doing here is I'm going to give you an update from my last video. Nonetheless, it will give you a good idea on who they are, as well as a little bit of an idea into my position onto this one, technical analysis, and institutional investors. So without further ado, let's jump right into this one. So first things first, I've gone through this one a bit before. My previous video is in the description below. Nonetheless, I do want to talk about just significant point of views over here. So just right off the big part of it is that the team itself that they do have, and I'll do reference part of it later on, specifically as well in terms of strategic advisors and directors from FRX themselves, coming in from different areas such as Spotify, TikTok, Walt Disney, Hulu, Disney, Marvel, Pixar, the list goes on. So that's more for entertainment. And even moving on towards the president and CFO, they do have backgrounds in companies such as California, Pizza Kitchen, Sony, Pepsi, PwC, and GSK. And going on towards the co-founder and CEO, they do have both entertainment and as well P&G, more fast-moving products background. So taking a quick look into this one, the Beachbody, it has digital subscription, connected fitness, growth in consumer health and wellness. So something like digital subscription, we can start thinking about it like Disney, Spotify, Netflix, growth, consumer health and wellness, Chewy, other products similar to that. In connected fitness, something like Peloton, one of their most prominent competitors in the market currently speaking. And the Beachbody competitive advantage. They scaled profitable at-home fitness and nutrition, market leader with holistic solutions, compelling macro tailwinds, substantial revenue and EBITDA generation, seasoned management team, and significant near-term growth opportunity. And we're going to move on just a tad there. This is basically a good idea on who they are in terms of the new company, Body. As Beachbody, which is more of nutrition, proteins, subscription-based, fitness, etc. My Fitness, similar to a Peloton. And then taking a looking into OpenFit here, which is more of a tracking devices, more, again, online a bit subscription. It's more similar to a digital subscription there. So digital subscriptions generally, you're looking into $2.6 million paid digital subscription with over $450 million revenue. That's in 2021 estimated revenues, and $99 annual subscription. So it's not a lot in terms of how much the price you're putting on. And then moving on there, you're able to see the next part other than the connected subscription is the My Fitness at a glance. You're looking at $100 million in revenue in 2021 estimated, with 89% subscription margins and a 98% retention. So they have over 27,000 bikes sold at $29 per month subscription cost. And then we get to move on a little. The digital subscription creation market opportunity, you're looking into 3.7 million digital subscription that will lead to around $450 million in revenue in 2021, that's estimated, and 430,000 nutrition subscription and other sales leading to $560 million in 2021 estimated revenue. And getting in just a little bit of everything together, we start looking into the financial revenues. And you get to see that they're estimating around a 30% CAGR per year, going on to 2021, estimated to be $1.1 billion, 2022, $1.479, in 2023, $1.9 billion, up to 2025, going on to $3.294 billion. Now, they do have different areas, so it's more of a parallel growth, and that's something that I do like myself. And then moving on, in terms of taking a look into, oh, by the way, they're generally very much of a profitable company. 2021, as a part of moving this pack, they are estimated to be negative on there. But generally speaking here, they do have the tendencies to be more a positive EBITDA rather than negative. And in terms of their valuation, at the current valuation, Beachbody enterprise value will be $2.9 billion, which is 2 times the 2022 estimated revenue, which is over sales. Now, some people might say, hey, that's a little bit too high, but let's be realistic here. Let's talk about the SP 500 price over sales ratio. Currently, it's trading at 3 at current. And for some companies like growth companies and value companies, that value is way above. The current mean over all these years is 160. So that means even the worst case scenario is you're investing and holding for a couple of years to get your money back, or at least, sorry, to multiply your money back. But the worst case scenario is it will break even within a few years, even if it tanks below, even though I do doubt that it would. But moving on, you get to see, yeah, $2.9 billion at 2 times estimated 22 revenue. Currently, their current revenue speaking for 2020 was $880 million, going to 2021 to around $1.1 billion, which at $2.9 billion is still below the price over sales ratio of the SP 500, and so thus you can consider it to be a bit cheaper in that sense. Now, total current valuation for this company, 2.9 billion. Some of it includes cash, some of it includes secondary proceeds, but the cash to balance sheets, etc., that's going to be very interesting because that it's very likely that this is going to emerge debt-free with enough money to go on towards marketing. Now, it's easy to have a really good product, but with the right marketing, it can go a long way. Now, in terms of other companies here, they do compare themselves. So revenue CAGR, you're looking that they do have even a better revenue CAGR compared to, let's say, Peloton, or Peloton, whatever you're going to say it. But anyway, the reason here is that the Beachbody company has multiple different aspects: digital subscription, connected fitness, and growth consumer health and wellness. And comparatively, 33% is a really good CAGR per year. And it's not that far off compared to other competitors. And we can move on, but you get to see that the multipliers itself are a lot better because for Netflix, for instance, you're looking to 7.9 times 2022 revenue. And they just announced that they are very much slowing down on the subscriptions or new subscriptions on their platform, which they hit on, I think they tanked down around 11% yesterday after market. And moving on as well, those multipliers you get to see are one of the lowest there is between their competitors. So for me, swing or investment, it doesn't really matter, but I do like this company for perhaps a couple of years or so. And another thing, these transcripts are more of gold mines. And I do want to highlight, we've got Kevin Mayer from Disney, and he was telling me about the Disney way, which pulses up things, right? There's just a difference in the Disney movie. They are a little bit elevated, and I look at our development team at Beachbody Way. You can produce a workout, no big deal, and put cameras on and get some good people to bark out some commands, and you get a great workout. But then there's the Beachbody Way, and then get some attention on details there, queuing with customer experience that makes everyone your favorite. And I hope people give it a shot, and I really appreciate the opportunity to tell my story. Now, moving on a little bit as well, the SEC filings are more of a normal thing moving on. There's not a lot of attention there, but we do know a little bit about the closing date. And before moving on there, if you'd like to see more about this content itself, if you'd like my video today, make sure to drop down below, click that like. There's also a subscribe button somewhere around there. Make sure you click it on with the bell notification button. And if you would like to join our Discord, show more on here, click into join my Discord, and you can catch me on there. You can ask me any questions. I'll give you a quick snapshot at the very end of the video. But moving on, what we get to see here is on SEC filings, they've been a little bit proactive, and we get to see that the closing is somewhere between May to June, that time period. Currently, we're at the end of April, which means we're only in the last stretch of this company merging through. Now, in terms of institutional buyers, we're looking at something very interesting. In terms of April, institutional buyers are picking up this one at a good rate, around 300,000 shares. And let's move on towards technical analysis. Now, from a technical analysis point of view, it's been very much accumulating very close to around the $10 value. Now, in terms of the MACD here, we see a positive reversal attempt that happened on the 9th of April, and it's more gone towards accumulation rather than a reversal, which is not the worst thing in my point of view. Accumulation means that nothing is massive is going on either way, and it's just more of charging up for a slingshot. That's my perspective on it. Now, momentum here, you get to see it's very close to around 0. Again, accumulation. ADX is very close, is lower than 20 accumulation, and willing percent R is highly oversold. Now, what's interesting here is that there's this trading action zone between the 10 SMA and the 30 EMA. 10 SMA is above 30 EMA, hence bullish, but the trading action zone where most positive reversals occur is between 1034 and 997. And once it gets there, it has a really good chance of bouncing up towards the 1034 and perhaps even hitting the 50 SMA at the 1112. Now the moving average bands, it really is interesting because the Bollinger Bands are very much tight. It's even inside the moving average bands. That's between 1027 and 983 in the bottom, even though the moving average bands are way extensive, all the way from 1105 to the top and 904 in the bottom. Now, currently, stochastic fast and stochastic slow both show that accumulation, and we can go on a bit of Fibonacci retracements for supports and resistances. And you see all the way down to 972. And what we get to see here is that, yes, the next Fibonacci resistance is at 1172, 1296, 1396, 1496, 1638, and 1820. Now, the very strong supports that I'm looking at currently, where we're sitting around the 987, 970, and then strong resistances that I'm looking at is 1029. That seems to be a strong one for it. Another one, 1062, and then 1103, and then 1197, 1269, going up to 1390, and then upwards to around somewhere closer to the $15 value. Now, quick thing about this one, what I think about it is that as a swing, I do think that this is a good opportunity to go for it because it is very close to that pipe value where institutions would buy on. Now, from my perspective, I do like what they stand for. They are right. COVID should as well give that a lot of attention towards at-home workouts. And so a lot of people have already put their mindset into this kind of workout and put it into their schedule, have a special place at home for it. But opening gyms might hurt this one a little bit in terms of the competitiveness for, let's say, in-house workout, but not the wellness part. That would actually balance it out. So it's more of a well-rounded wellness and fitness holding. And in my account itself, I don't have that in my portfolio, so I did go ahead and picked up some for at least a swing. If it does go above 25, then I'll sell in the short term. Otherwise, I'm happy investing in this one for a little bit of a longer term, let's say 5 years plus. What do you think about the sticker? Information down in the comments below. Share, subscribe, and like, and have a wonderful day.
Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.